answering any questions everyone might have.
Thank you. And I wanted to let everybody know too, Josh is one of the preferred lenders at our company. And we're also really picky about who we select as a preferred lender. They need to be like tried and true and vetted. And so we trust Josh with our business. So I just wanted to let everybody know that.
Oh,
You, and I really just miss seeing you, by the way. It's been weird not being able to see you guys pop in every once in a while. So
I do miss coming by and sharing some laughs, that's for sure.
we miss you bringing us coffee too. Do you want to start with questions, or do you want to start with the basic process of starting to get pre-approved?
Well, I know what you had titled this was the pillars of pre-qualification or pre-approval, and figure we can go over maybe those 3 pillars and then maybe go from there if you like.
Let's do that.
So one thing I try to do in my business is I try to simplify things as much as possible. I try not to speak mortgagees or talk over everyone's head. I want to make the process as simple as possible, where you're not thinking about it all day and all night trying to figure out what's going on. And when it comes to getting pre-qualified, there are 3 basic pillars, things you need to hit in order to get there. And they all have the same importance. The first would be credit. What is your credit score? What's on your credit report? Such as, if you have any derogatories, and what that means is like, bankruptcies or short sales or foreclosures, how many late payments you might have on, certain trade lines, just different, if you have any judgments, things like that, whatever is on your report, that's important. The second thing is income, whether you're hourly or salary, if you're W-2'd or 1099, or if you're self-employed, we need to know what your hourly rate is or what your salary is, or, if you're a business owner, we would need, tax returns to determine what we can count for income. So whatever your monthly income is, that's the second pillar. And oh, by the way, that's gross, not net. So whatever you make monthly gross is what we can use for your income. And then the third would be liabilities. This kind of falls in line with credit, but it's a little different. It's basically, what are you paying every month? What kind of bills are you paying? And this is stuff you'd see on a credit report. It's not necessarily your monthly utilities, like your electric or cell phone or your Wi-Fi or anything like that. And thank God for that, because my family of 5 are cell phone bill's pretty big. Julie, you can attest to that, I'm sure, or you can relate at least. So what are you paying out monthly? And the stuff you'd see on a credit reports, like, credit cards, car payment, student loans, those are the big ones. So we, take that and divide that, compare that to what you make every month. And that's how we get your debt to income ratio. And your debt to income ratio can only be so high. So that's what we look at. We look at credit, income, liabilities. Those are the 3 main pillars.
I have a question on the credit piece. What is the minimum score right now? We get asked that question a lot.
Sure. It depends on the program. If you're going a government loan, which, is FHA or VA, those 2 specifically, we can go down to 600.
Okay.
Ideally, you want to be at 620 though. With 600, we're going to have some compensating factors that can help, make your file stronger. So I would say 620, but we could work with 600 if needed.
Okay. We did have someone send us a question about how is there, like, can you help somebody if they have some debt? Tell them what to pay off in order to get that debt to income ratio up so they're able to buy Like, are
Sure.
there little tweaks that you can do? Because a lot of times people have credit issues and they don't really know who to reach out to. And I think that you guys can be, lenders can be a resource for them and helping them kind of look at the credit report, figure out what they need to pay off
Mhm.
in order to get that fixed so they can actually buy a house. Because sometimes it's as simple as paying off a credit card, right?
Sure. Yeah.
Yeah. Okay.
It's not just for debt to income, but we can also help with credit scores. Now we can't guarantee a score is going to get to a certain point, but we have tools we can use to say, if you pay this down to this much or pay this off, or even sometimes opening a new line of credit can help. But yeah, if you need help with that, I personally love helping someone that's not currently in a spot to buy. I love helping them get there. As someone that wasn't in the greatest of spots, a few years ago, and then working on it and getting there, it's a great feeling, and I love helping people achieve the same thing. So
That's really fun for us to be able to hand over keys to somebody that never thought they could own a house.
right,
Those are like the best transactions.
yeah, for sure.
And then that kind of leads into one of the questions that I have is when and how to start, or how early should they reach out to you?
As soon as you want to at least explore the market, you should call a lender. And in a 5 to 10 minute phone call, they can let you know, at least give you an idea of where you stand. But you want to do that before you start looking, because the market moves so fast that if you aren't qualified and it's going to take you a few months, the market's going to look completely different 3 months from now. It probably looks completely different than it did 3 months ago in August. Am I right there, Julie?
Yeah, it totally does. And the other thing too is we've had instances, I've had a lot of instances in the past where people have used like an online calculator to figure out what monthly payment they can afford. And then they go out and start looking at houses in that price range. Sorry, dogs barking.
Got a special guest.
Yeah, they go out and start looking in that price range and then realize that they maybe can't afford that much, but they've already fallen in love with a house that they looked at. And that's really disappointing as a homeowner to get that news and then realize that you actually qualify for $50,000 less than the house you looked at and fell
Well,
in love.
and on that topic, with the online calculators, those aren't necessarily bad, and they're accurate to a certain extent. They'll help you calculate your principal and interest, but your total mortgage payment is it's PITI, principal, interest, taxes, and insurance. And your principal and interest is one thing, but you're going to be paying your taxes monthly and your homeowner's insurance monthly, and possible mortgage insurance if that's needed as well. And so that's all going to be combined into your payment, and that's what is determined for your debt to income ratio. So you can get one number from a mortgage calculator, but it could end up being a few, even more, $200, $300, $400, $500, even $500 more than what that calculator says. And that makes a big impact on your debt to income ratio.
Yeah, and I think a lot of people are of the mindset that they don't want to bother people or get somebody involved, but you're telling everybody right now that you don't mind taking those phone calls where if people are they don't know if they qualify and they want to find out, they don't know where to start, you're totally happy to help them figure out what they need to do to buy a home.
Oh, for sure.
Okay.
Yeah.
Perfect. And then one of the things I was going to ask you has to do with guidelines due to COVID. What has changed in the lending industry because of COVID and layoffs and everything else?
Well, I mean, it's interesting you're asking that, considering just the changes that are going on this week in Washington, Oregon. It's been very fluid as far as federal guidelines on what is required, and what we need to see as far as employment goes. If someone was laid off or, furloughed, we just need, as of right now, we just need to have them, we need to see 1 month of them being back at work. But again, that's changing. Almost weekly. So yeah, any answer I give you now could change, by early next week, because, depending on how long the current lockdown extends to, it's going to affect guidelines across the board. I know, before they changed them to the 30 days of working, we had to calculate your year-to-date income by 12 months. So you could be making a certain amount, but if we can only calculate 9-10 months of income divided by 12, you're going to be making less. So, but again, that changed as of, a few weeks ago. So who knows what, next week will bring. And if you need to know, any changes to guidelines or anything like that, again, feel free to reach out.
Okay. Another question that we got was,
Did I answer that okay?
Yeah, you did. And I think
Okay.
that the most important thing, and I think we're all learning this, is just to be fluid about everything through this whole thing, right? Like everything changes on a daily basis. And
definitely need to be working. That's the for sure.
Yeah.
That's the one thing we know, throughout. You definitely have to be active with your employment.
And then how long do you have to have been active in your employment?
As of right now, 30 days.
Okay.
If you were, furloughed or laid off, but
okay,
back to work.
Okay. And then on that question, and this is a non-COVID, it's 2 years on your current job. Is that correct?
It doesn't have to be on your current job. You just have to have a 2-year work history.
Okay. Perfect. Yeah. And then the other question I was going to ask you is, what kind of paperwork is needed to get pre-approved? Like, what is required? I mean, I know, but I would love for you to tell everybody else. Pay stubs, tax returns. What's your standard list of what is needed?
Oh, you just said it.
That's it?
No. No, we 30 days of pay stubs, 2 years of tax returns, 2 years of W-2s. If there is going to be cash to close required, and cash to close means down payment and or closing costs, we would need to see some bank statements showing the funds are there. And that helps solidify your pre-approval and get your file built.
Okay. And then I lost my next question. Oh, you mentioned down payment. What are you seeing as far as down payments? Is there still down payment assistance available? And then what is the minimum down payment right now?
Yeah, there is down payment assistance available, especially with in Washington, the Washington bond program rates are crazy right now. It's nuts. I can't believe it.
They're crazy good.
Yeah.
Crazy good. Oh,
yeah. Nice. Especially compared to what they were last year at this time. Give me a call or check the Washington bond website if you'd like to get a specific rate on that. And there's a couple other programs, but the Washington bond would be the best.
Okay.
So yeah, they are available. As of today.
Okay.
If you're not doing down payment assistance, again, depending on the program, with government programs, FHA 3.5% is a standard down payment. With conventional, you can go 3% or 5%. Again, depending on the program. There's also a USDA program in rural areas. It's very property specific though, whether they can qualify for that, but that's actually 0 down. So that's something, to look into when you start looking at properties. And then also VA, if you're a veteran and you qualify for VA, that's absolutely my favorite program to do. But that is 0 down as well. So
So you can still get in for nothing down. And I think that's really good for people to know, because even if you're moving into a rental, you're looking at first, last deposits, like you're going into that with a big chunk of money. So, and then you have a way to we can write your offer so that your closing costs are wrapped in. So you can literally get into a house for very little money right now. And
Right.
with the rates being good, the payments are reasonable as well.
Correct.
So yeah, we get that question a lot is, what does it take? What do you have to put down? The other thing that I wanted to ask you about, in some of these programs, your down payment can be gifted, correct? So if you have a parent or grandparent or somebody that will gift you the down payment funds, we've had clients whose parents have given them money like in lieu of an inheritance so they could get into a house. So that's another way to get in, is with a gifted down payment. And is that just FHA, or can you do that on conventional as
You
well?
can do it on conventional.
Okay.
Yeah.
And then another question that we had is, what is included in closing costs, and what is kind of the average amount for closing costs?
Closing costs, average amount, you're looking at 2 to 3% of the purchase price. I mean, that's kind of a rule of thumb if you want to guesstimate. You found that, right?
Mm-hmm.
Yeah.
Yeah.
But what is included? It's, you have, title and escrow fees, you have your appraisal fee. There's, Fairway has, we have an origination fee. And then you have all your prepaids, which, you have prepaid insurance, prepaid taxes, you have daily interest, you have recording fees. Yeah, it all adds up to what, what your ending closing costs are.
Okay.
And if you want specifics about that, feel free to call me.
And you'll break it down for them too, right?
Yeah.
And then typically your out-of-pocket expense is going to be your home inspection and any other testing or inspections you want to get done on the house. And that's, on our end, like we will walk you through that. And then the appraisal fee is out of pocket too, correct?
Well, we can work our appraisal fee into the closing costs.
Okay.
So.
Okay, good deal. And then typical time that it takes to close. That was another question that we had come in.
Right now it's 30 to 45 days on purchases. I know Fairway is a little quicker than some of the other people I've talked to in the industry. We can get a purchase done in 30 days. I'm hearing a lot of people aren't able to, but still 30 to 45 days that's still pretty good.
So you can
refinances are taking a little longer than that, but that's because purchases have priority.
Right. So you can still get in before Christmas, everyone. If you want a house, you can still buy one before Christmas.
There you go. It's a Christmas miracle.
Yeah. And then I think that is all of the questions we have. How do people get a hold of you, Josh, if they want to see about getting a mortgage?
Oh, well, they can call me. 360-941-1511. I forgot for a second.
Well, you don't call yourself.
Who calls anyone anymore? Call or text. If you want to text me, 206-412-7436. Or you can email me at josh.walters@fairwaymc.com. Or yeah, I think you can hit me up on MySpace or or AOL.
Sorry, that
whatever.
took me a second. I was like, wait, MySpace?
No, we do have the Walters Home Loans. Walters Team Home Loans. We're on Facebook as well if you want to reach out that way.
You can also leave a comment here and I'll make sure that you get connected with Josh. We're going to leave the replay up. So if there are additional questions that come in, I'll tag you, Josh, so you can answer them.
Okay. How about you, Julie? How can people get a hold of you?
Easy. 360-910-3586, or just message us through the Facebook page.
Sounds good.
All right. Well, thank you so much for doing this with me. It was helpful.
Thank you. Anytime.
All right. We will talk soon.
Bye, everyone.
Bye.